Hey, it's Mike Klijanowicz coming to you today from Cummings and Company in Perry Hall, and I have a guest speaker here with me today, Bob Lowry, close friend of mine. He's been in the business for a long time. I've known him for almost 20 years now, and currently he works for M&T Bank. He's a manager for the area, oversees a whole bunch of different branches, and has 7 or 8 different loan officers that report directly to him. So he knows his stuff, and he's a good person to have. But today, what I wanted to talk to him about is a product that a lot of people can take advantage of in this current market. You see, I know there's a lot of you out there right now that own your house, but you have a mortgage, but you have a tremendous amount of equity in your house. You know, maybe you only owe $150,000 on your house, but you could sell it for $400,000. You know, that's $250,000 worth of equity that you could tap into to use as a down payment on another property if you wanted to move. See, a lot of people's apprehension about moving is that what happens is they don't want to have to put their house on the market and then not know where they're going and be homeless if they don't find something and they sell their house. So this program that we're going to talk about today alleviates that concern and allows you to go home shopping even when you haven't sold your house yet, so you can focus on make sure you get the house you want, get under contract, and then we can talk about getting your house ready for sale and putting it on the market. But you can close on the new house without even selling your house. Now, you do have to qualify for that, but we're going to talk to Bob about how it works. We're going to talk to him about how you qualify. We're going to talk to him about how long the process takes, you know, just so you can kind of get your ducks in a row, because even if you haven't found a house yet, it's never too early to start getting the bridge in place now. Because I just had clients that missed out on a house because they didn't. First, they were like, "We know we want to sell our house, but we want to kind of look, but we don't know what we're doing." And they found a house, they fell in love with it, and then guess what happened? Somebody else fell in love with it too, and they were non-contingent, and my people didn't have the bridge loan in place, and they couldn't move forward, and they took the other contract, and they lost the house they wanted. So don't let that happen to you. Get your ducks in a row first. And if you have more questions, I can certainly put you in touch with Bob after you watch this. But for now, we'll get into the nuts and bolts and some meat and potatoes on how this program works. So Bob, you know, bridge loans, like, just break them down. Like, you know, how do you qualify people, you know, DTI, stuff like that. What is all involved with this process?
Well, thanks for having me here.
Yeah, man.
Good day, everyone. So a bridge home equity loan is basically where you tap into your equity of your home and pull that cash out to help purchase the new home. So obviously, it's a very competitive market, and contingent contracts are not being accepted. So this is a way to go in and free up some cash to be able to purchase the new home. And like Mike said, you do need to qualify for both mortgages and the home equity loan. But we've been able to help hundreds of people obtain these loans. So it's basically a home equity loan, a second lien or first lien if you have no mortgage, and we can pull out up to 85% of the home's market value.
85%. So
85%.
So for, like, if you have 200 in equity, you can pull out $170,000 up to.
Yep.
That's crazy.
And when to get it, it's flexible. You can obtain the bridge home equity loan during the process of financing the purchase. You can do them simultaneously, but like Mike mentioned, it makes it less stressful if you get it up front. We just closed one. It took about 2 weeks to get an approval. No appraisal needed. No closing costs. There's no interest on the loan until you pull the money out, which is the great thing about it. If it sits there with zero, then you pay nothing, and you don't start paying interest on it until you actually pull the cash out for the purchase. And it's usually a short-term loan. Purchase your new home, and then a lot of customers immediately put theirs on the market. And you know, a lot of times they're closing within a month or two after they just bought their new home.
So from start to finish, if I want to get a line of credit going, how long do you think that process would take right now?
It's whether an appraisal is needed, because not appraisals not always needed, which is really cool. It just depends on how much you pull out, but it could be, depending on if an appraisal is needed, anywhere from 2 to 3 weeks to get an approval.
2 to 3 weeks,
and then it does have to close. There is a rescission period. There is a
three-day
booking,
rescission
right,
period.
a booking period.
So you can change your mind on
Right,
this loan,
right,
not
right.
like a regular loan, but this loan you can. Right.
But the great thing is there's no closing cost on them. Now, when if the loan is paid off within 3 years, which they generally are, there is a small prepayment penalty. It's less than 1%, usually less than 1% of the loan, and that recovers the closing costs that we incurred up front, which would be like transfer, recordation, recording the mortgage, and thus the title company fees and appraisal fees if there was one required. So, but they're relatively inexpensive.
Yeah.
I mean, it's better than pulling money out of the market, paying capital gains, or pulling it out of anything. Leave it in the market and use this. It's a very small fee relative to the cost of purchasing a home. Very, very small.
Plus, the other thing to think about here is, whether you have kids or not, or what your situation is, it's never a bad idea to have an emergency line of credit available to you whenever you're ready to do something.
Yep.
You may have a major emergency, get into a car accident. It's your fault. Insurance isn't going to cover anything, and you got to go buy a new car. Well, wouldn't it be nice to have a $100,000 line of credit to just be able to go to the dealership and buy a car and write a check, and not have to go through all their financing and all their crap, and then still be able to write the interest off on your taxes on an equity line of credit? People don't think about that too. So same thing. Maybe you got kids, they're going to be going to college. Maybe you don't have a college fund set up. Not everybody does, because inflation's here and it's $5 for a gallon of milk now, or whatever it is. Not everybody has money that they can save and they can put away, but you can use your home's equity as kind of an emergency. Now, what you shouldn't do is you shouldn't just get the line of credit and then go have some fun and go on vacations and go on trips and, go travel the world and blow all the money, because what happens is the market sometimes corrects itself. And if the market corrects itself and prices come down a little bit, you might find yourself fully tapped out and say, man, you shouldn't have done all those trips and bought all those cars and done all that stuff, because now I owe more on the house than what it's worth, and I got to sell it because I lost my job, and I got to do a short sale now. So you got to be responsible with this too. We're not preaching irresponsibility, but this product is perfect for people who are trying to remove the contingency of trying to sell their house in order to buy another one. Because if you were that other seller, in this market, there is no way you're going to take a contract that's contingent on another house selling that doesn't even have a contract on it or isn't even yet listed on the market. You're just not going to do it because you don't have to do it, because there's other people lined up around the block to buy your house. So do what you got to do. Put yourself in the right position to be able to negotiate the better deal for you, because when you go in as a non-contingent buyer and you go buy a property, you got some leverage now because you don't have a contingency where other people might. So you got a little bit more, I guess, stuff going for you in terms of getting your offer accepted, and then you start thinking about, well, do I need to waive a home inspection, or do I need to waive an appraisal? We can talk about that. That's a whole nother podcast on, the appraisal gap waivers and all that stuff and how that works. But for all intents and purposes, the bridge loan is very easy to get, and you can use it for all kinds of different stuff. And I'm an advocate. I have one on my house too. That way, if things ever got tough or I needed money, I got an emergency stash of money somewhere that I can tap into. Bob's got one on his house too. He's had to use it too, for different stuff throughout the years. He's got 3 kids that are all in college. I mean, that's a lot of money going out right there by itself. So, why not use part of your home's equity instead of, tapping into your hard-earned money, or borrowing against your retirement accounts and doing all that and having to pay it back in a certain period of time and all that stuff, and avoid tax penalties and everything else. So, that's what the whole purpose of today was, just to give you a good idea on how to put yourself in a position to be the strongest possible buyer in today's competitive, ultra competitive market. If you think I have a house to sell and I don't know what to do, this is what you do. And if you still don't know what to do, pick up the phone, give me a call, 410-236-3331. You can call me, you can text me. I'll get you in touch with Bob and put you in touch with a great lender there with M&T Bank. They're a local bank. I mean, they're not going anywhere. They got their name on the stadium. It's M&T Bank Stadium. They've invested in the community, and this is why we invest in them, and we know they're not going anywhere, and they're doing a good job. So anyway, thanks for coming in today, Bob. It was great having you here. Appreciate all your insight, all your market knowledge, and we'll get some more buyers over to you soon. So everybody, take care. Have a great day, and just reach out if we can be of service to you at all. You got all our information. Thanks again, and have a good one. And God bless everybody.